The best part about trading is the longer that you do it, the more experience you gain, the better your ability to be a profitable trader, the risk management. The longer that you do it, the more you learned. And one of the things that you'll learn in time is how to look at a chart and identify different patterns, different setups, and have that recognition, right? And that just takes time. The more that you're looking at the charts, the more that you're seeing the moves, the more that you're trading, you're going to build up that recognition for different patterns. Something like just being able to look at this chart and be like, hey, look at that beautiful bear flag. Kind of pushes back up, gets denied. And just seeing how the market moves. So, kind of just going through here, looking, back, different setups that we see. And mostly right now, the market kind of giving us different ideas as we look through here. This is a good example of a double bottom. Obviously, we had support, bounced around there, 19,775. We kind of pushed back up and we tested that level again and then broke out to the upside. A little bit of a W pattern there, but I would, basically call that a double bottom, meaning that the market sold off, bounced, pushed back up, tested it again, and then rebounded and broke through that high up there. You got something, trying to just see, it's not always so easy to just look back and kind of figure out all the different patterns. Sometimes there is no pattern, and that's also an example of kind of a time to not trade. And yeah, just kind of going back through here. I'm also on the 15-minute chart. Sometimes going a smaller time frame, you'll see those patterns more often on a small time frame, right? So there we go. Even looking at here today, the same way that we get kind of a double top or double bottom, I should say, we can also get these kind of double tops. Now, the thing about this is not every top or double bottom top area is going to be perfectly in line. Sometimes you're going to get these little fake outs back up and then that move back down there. I'm trying to see if I can find a head and shoulders pattern or something like that. I mean, a head and shoulders pattern, you're basically looking like the market kind of pushes up and then makes another hole, but then it pulls back and doesn't make a new high and starts to break down. So your short is kind of right there. That would be your head and shoulders pattern. Basically, the left shoulder, the head, the right shoulder, and then the break to the downside, which can also play out in terms of being an inverse head and shoulders. So you have kind of this pullback, another dip, another pullback, and then the breakout. So that's the double, or I guess inverse head and shoulders. So you have a inverse head and shoulders there. You've got a cup and handle type setup as well, where the market pulls back, pushes up, and then pulls back here, and then gets the breakout. So you're looking like a cup and then a handle there, which is also a very kind of common pattern that I've kind of seen over the years. Basically what that is doing is, the market's pulling back, it's pushing up, it's pulling back again, kind of retesting that push, right? You're getting a retest of that setup pushing. So the big thing here is just remembering that it's going to take time. It's going to take time learning, experiencing, seeing these patterns play out, and then also knowing what to do when those patterns play out. You've seen it before. You've seen it before where we start to break out to the upside, we get denied, and then we pull back, and then we start to move down, we break through levels. So the more and more that you're seeing this happen over and over, right? You see this happen, you start to build up that muscle memory of knowing how to react. So that is just going to take time. I can sit here all day long and draw different patterns and try to explain to you, but it really just takes time being able to see the flags, see the breakouts, see the overall trend. That just takes time and experience. So again, we kind of broke down the different types of patterns. You're going to see the double top basically looking like that, where the market kind of retests a certain level 2 times, doesn't get through there, and then sells back down. Double bottom, for example, the pivot point there might look like that. Obviously just double bottom. And the cup and handle the head and shoulders and all that type stuff. I definitely see a lot of head and shoulders where you get that kind of first little push, we push up. The key here to this setup really is the fact that the right shoulder is, like, if the high is here, the market pulls back, the right shoulder kind of, you know, gets to the middle of that move down, but it doesn't make a new high. So you really want to kind of see these patterns as an idea. So like a cup and handle, if we pull back and we break this low, well, that would obviously invalidate the cup and handle type of setup. So you're really looking for, you're kind of envisioning these setups, these possible entries and patterns, and you're anticipating, like, okay, well, you know, knowing that there is a pivot point there at that level, what would the market do? Would it kind of build out a pattern? If it's going to do a double bottom, what's that look like? So you know that for a double bottom, you kind of get that push back up and then that pullback. So it's almost like giving you an edge to be like, I can wait, right? Like, I don't expect the market to just go straight here and not retest that level. I think there'll be a good chance that we retest that level and then I can look for my entry. So that's, you know, playing into same thing with like a short. If the market's pushing up to a level, gets stuck at that level twice, you know, well, there's your short opportunity when we break that previous little bit of a low, kind of being that handle of that cup or whatever you want to call it, that little flag, little bull flag breakout. This is kind of where you want to be shorting when we break back below that low there. So you can see now it's like, now that's kind of the pattern from there. We push back up, get denied, and see that. So it's more so like being able to see the pattern forming and being like, okay, all right, now I expect that if the bulls are gonna, or the bears are gonna be strong here, what's gonna happen? We're gonna double top, and then I can look for my short. And again, it's not always perfect, right? Like, not always does the market push right back up. Sometimes it doesn't make it all the way back up in there, but you're just basically looking for, is this, you know, on that setup, is that, if this is the high, are we pushing all the way back up to that high, or are we getting stuck right there? And again, it's like that breakdown right there plays out perfectly. Like, that's the entry on that setup. Even like this being like kind of a double top, because we know that we couldn't push through this previous high. This is being the previous high there at that level, and then you see how we just couldn't get through there. So same thing with the double bottoms. Sometimes you get these double bottoms like that, where the first bottom is there and then that second one kind of pulls back and then gets back up. But the same thing goes, right? You can still play that breakout potential, basically looking to get back up there above this level and then having that potential for a long to the upside. So you're anticipating and you're seeing these setups. The market's not always perfect. It's not always going to just give you exactly what you're looking for, but you're able to leverage what you see with the patterns and how these things play out and kind of tell yourself, like, I know that if the market is opening up, like a good example, if the market's pushing, there's a good chance that at some point we're going to kind of retest, and I would love to see this kind of pull back into the middle of that push up. So it's like the market pulls back into that and then continues higher. So it's all about the pattern, right? We need to see that bear flag play out. So this is a good example with actual candlesticks. We see this big sell-off here, right? The market's obviously trending down. So the pattern is there's a bear flag, right? We're looking for a bear flag. So if this is, let's just do a replay here. If we're getting down on this level, what do I know? What do I want to see before entering a trade? Well, I want to see some type of bear flag, meaning that we get a little bit of a pushback up, we get denied, and then we kind of form our pattern. So as we're watching this kind of play out, okay, we went lower. That's fine. It happens. You know, I'm not going to FOMO into this because I know that when we go down like this, there's a good chance that we go up like this, because that's how the market moves, right? In the waves. And that would make us a bear flag there. Let's see what happens there. Next candle, next candle, next candle, next candle, and look at that. Would you just look at it? That just played out perfectly. I know I just saw it there, so maybe you can say I was cheating. But in general, you know, going back to that start of that move before the flag, right, before that setup was there, we saw a big drop. Okay, ding, 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 ding. And there's our break to the downside, like we just talked about, the break out, break out of that bear chat, and you saw that. Like, you know these patterns. You know what a flag looks like. You got to be able to recognize it, and you got to kind of think about it playing out. If we sell down, what does the flag look like, and at what point is the flag, continuing lower? Do we break to the upside and invalidate the flag, and vice versa? Remember, every move has happened before. Every single move in the market has happened before. It's just about kind of seeing these setups as what they are and not telling yourself that, hey, we're selling. I want to get long. So if you think about getting long down here and momentum is pointing down, you're just fighting the trend. So yeah, maybe you could buy long right here, back above the 20s. So you get long back above the 20s, it gets stuck, and then before you know it, you're getting stopped out and the market's moving back down there. So avoid that. You don't need to know exactly where the market's going to go. You just need to understand that the market is always moving, my friend.